Good afternoon. George Cavaligos for HFT Bonds. Wow, what a day. No nasty short covering rally like we saw yesterday afternoon. And no, bounce overnight either. I hope you guys caught that, late last night. Market kept trying to rally in the afternoon. I know the 10-year couldn't get above 06 plus. I think the afternoon high was 08 plus. I was kind of thinking we'd get a bit of a bounce this morning, coming in. That's been the pattern the last couple Fridays. We'd have the sell-off Thursday, we'd see some follow-through into Friday morning, and then we'd get a nasty bounce. Well, there's no bounce today. It looked like, the chit-chat around was that there was some serious money being taken off the table in corporate bonds, high-yield bonds, junk bonds, treasury bonds, and moved out into equities would be my guess. Obviously, look at how the equities are trading here. I think we had a little bit of a bounce on the Fed buyback today. You had to put some shorts on any little bounce, or even you could get away with selling weakness today. I don't think we had, after the early morning bounce, from what, 9 to 9:30, something like that, which was kind of funny. It was after the buyback, but it was still buyback related. And then the selling started up again and just kept drifting lower and lower and lower. You just gotta, when you see that kind of trade, it's almost like you hold your nose, you close your eyes, and you sell a couple. You hit a bid, and you sit around and wait 5 minutes. We did hit some pretty important levels. I highlighted in the chat late in the afternoon the 144.04 level in the bonds and the 131.13 plus level in the 10-year. The 79% retracement of the whole previous rally. I think almost 3 weeks from the unemployment number we rallied. It took us 3 weeks to rally the bonds 3 points. It's taken us 2 days to take it almost all of it back. And most of it was overnight, unfortunately, but that's the nature of the beast these days. Moving forward here, now next week we have the auction starting on Tuesday with the 2-year, 5-year, and 7-year. I have to see over the weekend. I gotta imagine we bounced a little bit. The 10 years went down to 11. The bonds went down to 143.30. We're bouncing a little bit now. Barring any surprises, I'm assuming we get a little bit of a bounce Monday up towards that 22-23 area on the 10-year and back up towards 144.16, 18, maybe even that 144.21, 22 area. That'd be my favorite spot on the bonds to take a shot on the short side again. It's going to be an interesting couple weeks ahead of us now. The main focus in my part right now are the previous lows at some point. Now, do we go back into the same pattern of rallying Monday, Tuesday, Wednesday, and then reversing on Wednesday like we have for the last 3 weeks? I'm not so sure. It's going to be tough. We got auctions. Equities are closing on their highs again, even though, and you keep looking on Twitter and everywhere. Man, if you're a trader, you got to be on Twitter. There is so much good stuff out there. And just watching what people are doing, and you kind of get an idea. In the old days, it used to be like standing in the pit and watching what everybody was doing. Man, look at everybody over there. They're getting short. Those guys are selling. The smart money guys are over there buying. When you look on Twitter, you see the smart money guys, and you see the flow, and you get a better feel for what's going on in the market. A lot of great stuff. If you guys are on Twitter, fire on my personal Twitter. Obviously, if you're watching this and you're not one of the subscribers, you're certainly not going to get as much as you do in the chat room or on our HFT Bonds Twitter feed. But take a look. We'll see what happens. I just checked out the commitment to trader stuff. Nothing big there. You're still seeing the small spec accounts very short the bonds and notes, and maybe they got it right this time. I guess that's what we are. We're small specs, and hopefully we got it right. At least part of the way. That's for sure. But like I said, the focus has to be on the old lows here now. We're going in the unemployment number this week too. Next Friday is the unemployment number, and it's kind of a short week. We got month end popping up. I noticed the extensions for the index guys for bonds and notes are pretty small. I think that's part of the reason we're seeing this sell-off. We're not seeing the month end buying. We will see some month end buying as we get into the middle part of next week. So we'll have to keep that in mind. And then, as always, the Fed's buying every stupid day. The unemployment number is going to be real interesting. Remember, the Fed said, their main focus is to get unemployment down, and I don't think they really mind the fact that rates are going up a little bit here. They want the unemployment. They don't care. It's not like they have to manage a profit and loss statement. They don't. Doesn't matter. They put them in the drawer and then wait till they mature. Probably they're not going to unwind these things either, like people are afraid of. That'd be unbelievable if the Fed had to sell into a declining bond market. Can you imagine how bad that would be? But like, my focus, the lows, 131.04, 143.17, will determine what this is. I'm seeing the evidence pointing more towards this being an impulse wave to new lows rather than a corrective wave that retests the old lows or possibly makes a slightly lower low in an irregular B-wave fashion. I don't think that's what we're looking at. The volume today and yesterday was huge. 1.55 million 10-years. That's big volume. That's the biggest volume we've seen in a while. Yesterday, 1.2 million 10-years. Big volume. Today was option expiry. I think open interest will drop a little bit because of the options expiry. People unwinding stuff that they had. A lot of people did okay. A lot of guys own puts on this trade down. I think we haven't seen any real liquidation of those put positions yet, but some of it will expire. The stuff that was what is today? Today's the end of January, so these are the Feb options that are going to expire, I believe. So let's see what happens at the lows. Like I said, I'm inclined to believe that we're starting an impulse wave down to new lows. Where those levels are, we will talk about as the week progresses, and we'll definitely talk about it next week in the webinar next Thursday. Please sign up. It's free. It's open to the public. Come and join us. It's a great 2 hours of FX, gold, equities, bonds, notes, questions if you have them, you name it, it'll be there. Specific equities, equity indices, it's well worth your time to spend an hour or two before the unemployment number to get prepared for the unemployment number the next morning. So, have a great weekend. Come on in, join the community, guys. It's open 7-day free trial. Might be a good time with the unemployment number. Take a free trial. Have a great weekend.